Welcome to SmallCapSteve Live. I am the SmallCapSteve. Thrilled you could all join us. We had some technical difficulties there. Let's see if it actually operates this time, if our streaming provider is going to agree with us. I got young Justin joining me. Lots to talk about. Got a couple of IPOs happening very soon. We've got Coursera is going public tomorrow, a deal that is near and dear to my heart because I actually have a background in online learning. And I really want to share my thoughts and walk everybody through the S1 as I see it. Let's look at how much cash flow they're generating, how much EBITDA they're generating, all that kind of fun stuff. There was fireworks on Friday when we found out that a whale who was using swaps to get excessive leverage got margin called, and it resulted in a couple of stocks, just Viacom and Discovery. They just got slammed on average about 27% on Friday. We're going to get into all that fun stuff. Just kind of looking through this. Biden is going to be updating the investment community soon and the U.S. in general on what that infrastructure bill is going to look like. It's expected to be north of $3 trillion. And this is probably going to be a choppy week because we got Easter coming up. It's going to be a short week. So I suggest you all do this thing called grabbing your buckle and buckle up because we're going to get started. Justin, sweet Justin, how do you do?
Good. How are you? How are you doing this morning, Steve?
I am doing fantastic. I woke up this morning and put on CNBC. I had no idea what the name of this fund was that apparently blew up the markets on Friday and had everybody talking all weekend. In fact, you and I had a night Saturday chat. We went on video and we went over some stuff together. I don't think you went on video, but I did, which is kind of weird. And we started. It was actually like this is how big of nerds we are. Is we tried to understand the logistics of how ETFs work, and we actually like got a full whiteboard going of like trying to go through the process of making sure that we understand the mechanics fully. And then we started going through some of those tweets that everybody was talking about all weekend long. So. Do you want to try to summarize it for us, or should I just pull up that tweet that you sent me on Saturday night and we can go through it?
You could probably just pull up the tweet and then we could, I can comment on what I know along the way because I think the lady explains it pretty well in her tweets.
Okay, all right, let's do that here. Just gonna pull this up. Apparently there's an echo is what our producer Chris is saying. We're having a lot of technical difficulties today. Okay, so this is a tweet that was put out on I don't know if this was Friday or Saturday, but it sort of broke us down. A Korean top prop trader, Bill Wong, was liquidated of his entire $15 billion position on over $80 billion gross notional exposure yesterday. I don't know if any of this is actually accurate or not, by the way. This is just what somebody put on Twitter. So full disclosure here. I don't even know who Dovey Rugg the Fiat Juan is, but there's clearly a lot of merit to what's being said here because this later showed up on CNBC this morning. So, real people are talking about this thing. This might be among the biggest liquidation in recent years for an Asia prop shop. Many of his positions are Chinese big tech stocks like TME, Baidu, VIPS, etc. All of his position, all his position stocks hit hard yesterday. So on Friday, Bill started trading with his own money, approximately $200 million after leaving Tiger Asia on 2012, and grew it to 15 billion before being completely wiped out. If you are looking into building up a position of Baidu, TME, VIPS, this is a sweet buy the dip opportunity. To be honest, Bill is a pure legend. Rarely will someone like his size is still on such high leverage without hedge. Reminds me of a Weiss once said, linear wealth, not compounding wealth. He will make it back, I'm sure. So what are you hearing, Justin?
Well, so I think the reporting that they said it's pretty correct. The numbers I heard is kind of wrong. I heard 15 billion as like his cash position, but he wasn't running like the 5 times leverage that people say. It was maybe like 3 or 4 times, and it was probably like 130% net or over 100%, 100% net exposure to the long side, which obviously has gone down a lot.
So it sounds like GSX is a stock that's never made any sense to me, and it's kind of timely too, because we're going to get into an online education story shortly called Coursera, which is IPOing tomorrow. I wonder how much of what's gone on with some of these ADRs, American Depository Receipt stocks in the U.S., are actually fundamentally tied to the stock. Are you guys getting an echo?
Yeah, I hear it.
Okay. Is the echo gone? Is it gone now?
Yeah. I don't.
Tons
I
of
don't hear
technical
anything.
difficulties.
There we
today.
go.
Okay. All right. So we got that figured out. This is just the morning Jordan leaves. The guy who has nothing to do with the technical setup. He leaves one day, and we're having all these issues. Okay. So yeah, I'm curious how much of an impact this has on some of these Chinese stocks, such as the GSXs of the world, and I'm sure that there's other names. I don't really follow it that closely. The only reason that I would ever feel a need to follow it is if I wanted to get on the short side, which is not something that I tend to do. But that's some of the stuff that I'm hearing. And I talked to some of the people I know down in the US that seem to be pretty tuned in, and they think that this could be the beginning of, now obviously, like, it's exciting when these things happen, because, it means extreme volatility. But I'm hearing from some of my people that are well connected that there could be more to come from this.
Yeah, I mean, even today, the fallout's still happening. GSX down like 11.5%. Let me see. The China names are down 5 to 9%, and Viacom's down 7%. So it seems like the selling's relentless. Well, less relentless than it was on Friday, but it's still there, right? So there's still some follow through in that.
Does this mean that we have reached the end point for the equity markets?
I wouldn't think so. I mean, I think this is a blip in the radar. It's not like a large thing. It's a pretty big fund, but I don't think there's going to be like contagion or any sort of unraveling of other positions, because your prime brokerage just took a hit, providing the swaps.
Well, it'll be interesting to see how this plays out. I don't have a ton of insight into where I think that this is going to go. We're kind of all in the dark when you've got a fund that's holding this size of positions, and CNBC can't figure out how to pronounce the name properly, and they're having a live on-air discussion. I say Archegos. What's this called? And they're blowing up the U.S. equity markets. It's a pretty good sign that we don't really, to quote Roaring Kitty, we don't always fully know how markets work.
Yeah, and I think there's some like interesting things to take away from this. Well, the first thing is Bill was fined by the SEC in 2012. I think he had to pay like $60,000 or something for front running like China banks. I believe it was.
Here, I'll pull that up.
So that came around, and that was kind of the talk of Twitter on over the weekend. Another thing that was very interesting is that because Bill doesn't buy the equity and he uses swaps, he doesn't have to disclose his positions and names, right? Because the underlying equity isn't owned by him; it's owned by your prime brokerages, so like MSGS. So you don't even know who's holding what and how much exposure he actually has in notional value to these names or to any name, because he's operating using swaps. So it's kind of everyone's in the dark.
So this is really interesting here when we have this this news release. Are you getting an echo right now?
No.
Okay, perfect. So let me pull. Let's put the two of us at the bottom of the screen here so that everybody can see our faces as we read through this. But so hedge fund manager to pay $44 million for illegal trading in Chinese bank stocks. This is referring to to Bill Wong. The securities and this is back, by the way, this is back in 2012. So this is a previous taste of Bill Wong. The Securities and Exchange Commission today charged the manager of 2 New York-based hedge funds with constructing a pair of trading schemes involving Chinese bank stocks and making $16.7 million in illicit profits. He and his firms have agreed to pay $44 million to settle the SEC charges. That is not an insignificant amount of money. I don't know about you, Justin, but I don't find $44 million under my couch cushions.
Yeah, especially like he made 17 million in what they what they gauge is 17 million. So you're paying 3 times that, obviously because you front ran or you did insider trading is the risk versus reward on that doesn't seem like it's too high.
Mm-hmm. So moving on here, the SEC alleges that Sun Cook Bill Wong, the founder and portfolio manager of Tiger Asia Management and Tiger Asia Partners, committed insider trading by short selling 3 Chinese bank stocks based on confidential information they received in private placement offerings. Wong and his advisory firms then covered the short positions with private placement shares purchased at a significant discount to the stock market's price. They separately attempted to manipulate the prices of publicly traded Chinese bank stocks, in which Wong's hedge fund had substantial short positions, by placing losing trades in an attempt to lower the price of the stock and increase the value of the short positions. This enabled Wong and Tiger Asia Management to illicitly collect higher management fees from investors. I'm not going to name the equivalent of this company in Canada, but everybody knows who they are. And by the way, I do not for a second think that they're the only one, but there's one company that everybody always kind of points their finger at. The problem with all this stuff, no one really knows how it's true or how true any of it is. But this idea of I'm going to short a stock, I'm going to bully it, I got the balance sheet to do it, and then I can force them to cover on a private placement, is something that I know in the small cap and junior markets here in Canada has been a big problem. To the extent that we know, because really, like, it's all kind of blind. It's like no one really knows who's shorting. Nobody really knows who's participating in the private placements. And heck, as you just said, there's with the whole swap thing, which I find wildly fascinating, because it really, like, if you think about a company where you've got a founder or CEO who needs to unload a tremendous amount of shares, it's not good for the stock and it's not good for that individual to publicly disclose that they're selling. Agreed?
Yeah. And I think, like, that's where you get into the GameStop Melvin situation, right? Like, you had, like, Reddit went out of their way after, like, the whole GME situation to go, short either Melvin's longs or go long Melvin's short positions, because they had to file their actual positions in other names, right?
Mm-hmm. Yeah. So it's but what I'm getting at here is that if I'm the founder or the CEO of a publicly traded company and I want to sell some stock, it's interesting to know that those swaps exist, because it makes you think, like, if I've got, say, I don't know, 15, 20 million shares of stock that's trading at like $1 or $2 after it's had a tremendous run, and I wanted to unload it, could I not find some sort of structure using swaps and some third party so that I can effectively sell my position and then announce all of my insider trading activity at once, as opposed to dribbling it out? Because retail investors and just investors in general, when they see that somebody's liquidating a position, they tend to not like it. So
yeah, I agree with you.
And perhaps I talk to too many management teams and I see this issue, and it's like, something works out well, management has a right to sell. There's a reason that they own those shares, and they should be able to sell. But insiders tend to hold a lot of stroke over the stock going up or down with their insider buying and selling. So that's a whole side point. We don't really need to get into all that today. What else is going on in the news that fascinates you, Justin?
Well, there's actually one last thing that I wanted to talk about the situation.
Okay, go ahead.
Is that Credit Suisse and Nomura came out, and they've both said that they're gonna take hits on their like in their prime brokerage accounts because of this fallout in these stocks, right? So Nomura came out and said that they are losing up to $2 billion and that is based on market prices on the 26th, I believe. And Credit Suisse just like has said something, but didn't disclose anything else. And I think it's really funny because Credit Suisse has come under fire recently because they had the whole incident with Greensill. Greensill was like it was a fund that would chop up accounts receivable. It's something called supply chain financing, and I think Credit Suisse had like a $10 billion investment into this supply chain financing company, and it just filed for bankruptcy. So they're taking a hit on that as well this quarter, on top of whatever's fallouts from this situation is. And last quarter they took another fallout. I think they took a $1 billion loss on another fund that had to unwind, and they their prime brokerage account took a big hit. So they seem like they're not picking up any wins in the last few months.
Yeah. I wanted to get into GSX's financials here because I think that it's pretty interesting. I pull up the cash statement here on Y chart, sorry, not cash flow statement, but the stats that I'm paying them good money for, and none of that shows up. So now that means I got to go find the actual SEC doc, which is going to be too boring to do live on air. So thanks, Y charts. You charge me money and you don't provide data, which is your job to provide me with data. So thanks a lot, guys. I think the GSX high level, and I kind of want to get into this because this is going to bring us into the Coursera IPO. I think the GSX is a pile of crap. There's no reason that this thing trades at an $8 billion market cap. It says that they're doing $1 billion revenue, so according to Y charts, but like there's not that much money to be made in online education. It's generally will work its way to being a low margin business. It ultimately, as my buddy Siggy there over at Grizzly once said, there's a lot of red flags on it when you actually look into what's happening. And there's a lot of short sellers that are circling GSX, Coyotes, Muddy Waters, and there's probably been other ones too. So it's a really egregious one, and it wouldn't surprise me if this is the beginning of the end for GSX. Have you looked into GSX at all, Justin?
I have not. I read Siggy's report. I read Block's report when it came out. And yeah, I think I agree with you. I think it has to do a lot with like their auditors. As we saw, like in Wirecard, auditors are kind of complicit in situations where they can't verify data. So you say that GSX does $1 billion in revenue a year, but like who knows how much of that is actually legit. And
well, that was the problem. And you can watch the China Hustle. They talk about it in depth. But here's the cash flow statement for the 3 months ended here. So this is in Rambini. So they do convert it to US dollars for us in 2020. They did. They're losing operating cash flow. So if they are lying to us here, is this in thousands?
I don't think I can see your screen right now, Steve. So.
Screen here. Let me pull this up for you here. Hold on a second. Hold on a second. Hey, Justin, it's coming. This is why at some point I need my producer to take over here. Okay.
Yes.
So you can see that there. Here's a screenshot of the operating cash flow statement from the fourth quarter ended 2020. I love cash flow statements. It took me a while to understand how important they are, but they really tell us the actual merit of the operating business. And we can see here that for the year ended 2020, I presume that this is about, they lost $230 million in operating cash flow on a non-GAAP basis. To me, like that's for a company that has an $8 billion market cap, there's something very wrong with that. And look, I mean, they're saying that they did $1 billion in revenue. Somehow they couldn't make money off of it. They lost money on an accounting basis. Probably give us some sort of an EBITDA term, because of course, why wouldn't you? If you have this data set, you can really put us in a position where we are going to think that you're actually making money. Did they not give us an EBITDA figure?
They might not. I don't think they can give EBITDA statements or EBITDA numbers
No.
on financials or like on the financial statements. I don't. But
This isn't. I don't know. This is bizarre. I got this on their website.
I mean, I'm sure that the press release is riddled with fucking.
This is a news release. So a news release,
Yeah,
you can, right?
They do.
And they didn't.
Oh,
so that's
yeah.
kind of odd.
I know you can back out whatever the hell you want and call it EBITDA, and
yeah. So I ultimately I think that it's never made sense to me, and eventually I assume that it's going to fall apart like a house of cards. But let's pull up here. I want to pull up the Coursera S1. So they are going public. So this is Coursera. They go public tomorrow.
okay.
Have you heard of this company?
I've not actually. I think you mentioned it to me once, like the last couple of days, but I've never heard of this company before.
So this is the universal access to world-class learning. So let's our purpose statement. Let's see if there's anything meaningful in here. We believe learning is the source of human progress. It has the power to transform our world from illness to health, from poverty to prosperity. Oh, okay, cool. Thanks for that great page. Here's the prospectus summary. Our mission is to provide universal access to world-class learning so that anyone, anywhere has the power to transform their life through learning. We believe that education is the source of human progress in today's economy, in which the skills need to, okay, now let's get to your business model. Our business has experienced rapid growth. As of December 31st, 2020, more than 77 million learners registered on our platform. That's a significant number, even if those numbers are coming from third world countries. That's still a pretty gigantic number.
Yeah, that seems quite a bit.
With over 2,000 organizations, 4,000 academic institutions, and 300 government entities had used our platform to upskill and reskill their employees, students, and citizens. We generated over $184 million in revenue and $293 million in 2019 and 2020, representing a growth rate of 59%. So 59% top line growth. Of course, they lose money because that's why they're going public, is because they can't pay their bills from internally generated cash flow. Our solution, so this kind of walks us through their solution. Coursera is a platform that connects a global ecosystem of learners, educators, and institutions with a goal of bringing world-class education to adult learners everywhere. A catalog of high-quality content and credentials, content developed by leading university and industry partners, data and machine learning drive personalized learning, effective marketing, and skills benchmarking. Would have to look into that. It's not uncommon for publicly traded companies to throw around the term machine learning and AI. So they're saying 77 million registered users, learners and users in the one word, users. 6,000 businesses, universities, 150 university partners, 50 industry partners. So this is all cute and everything. And it's just like, you're looking at this, right? Justin, you're looking at this and you're saying, okay, this looks like a cute little business.
Yeah.
Right? They're growing, 59% revenue growth. They've got lots of people using it. They've got lots of institutions and partnerships growing. But what do we look at next here? Well, now, how's my way to know? Like, how do I have any sense of if they even make any money?
Well, I mean, I guess you would probably look at the bottom line. So you'd probably look at net income. But obviously, like how you look at it is obviously with the cash flow statement. So I mean, I look at both, and like I don't have the numbers pulled up, but when you're going through the S1,
here she is.
it said that their net loss wasn't that much, right? It was like 70 million.
Well, here based on 2020, it says the net loss was 66
yeah
million.
So I mean, like they're pretty close to break even or having a positive net income, right? So I mean, at least this isn't like GSX where they lose an insurmountable amount of money. At least this company, with some growth and some optimization, could hit break even or positive net income, which I assume that's what analysts are estimating for 2021.
Did they put the pricing range down on this thing? According to this, see, there must be an amended copy here. This is one of those ones where they leave it blank. You can see here when I pull it up. All right, see, there's no pricing. Let's see if there's an amended version here.
I mean, I have no idea what this company is, but I'd like to hear your thoughts on the business model, and if you think
So this is an area that I find very fascinating because I'm just I used to run an online school, and here's the amended version. This is the one I originally meant to pull up, but with all the technical issues, I ended up pulling up the wrong one. So we see here $33 a share. They're selling 18 million shares, hopefully. So what does that work out to? They're trying to raise $600 million. Yeah. Am I reading that right?
Which should propel them to go break even, or should keep them afloat until they turn.
They're going to be properly capitalized. I'll tell you that much. If they're able to get that, there's a little bit of deal fatigue going on. So who knows if they're actually able to raise that money. But that's a significant chunk of change, $600 million.
Yeah. I mean, and I assume that'll help them propel them to positive cash or positive EBITDA or positive net income, and
I believe that on a post money basis, that will make the valuation about 3.9 billion. So they had it somewhere here. Where was it here? See, this is why you don't want to look at the amended statements, because they always make them go from pretty to unpretty.
Yeah.
Let's see here. This is probably not riveting enough television for me to keep doing. But it was in there. I think it worked out to about 130 million shares outstanding post this financing. So,
yeah.
That's expensive. That's expensive for a company that burns cash, but they do have a lot of active users. So these are interesting companies to roll the dice on. But the issue I have is how much money can be made in a platform like this, where in a world where when you want to learn something, how often, like, you're a young guy, Justin, you obviously love your learning. You love it. How often do you pay for a course?
I mean, other than like actual school, very rarely. There's some websites that I've tried that I was thinking about paying for a course, but other than like actually like school, I don't think I've paid for any like external courses for anything.
So that's one of the questions I'm getting at, because when you go through the S1, one of the things they talk about is they have courses for as little as like $10, and for as much as in the thousands of dollars, depending on what you're looking to take, or if you're looking to do a full degree. Some universities actually use Coursera to offer their online learning. My issue with this business is, they've already hit a pretty large scale here with 70 million active users. They're already doing significant top line revenue of close to 300 million. What's the pivot here that's going to make? Because when I pull up, let's just play with their adjusted EBITDA numbers here. As the business has scaled, they're not making any more money using their own metrics, the adjusted EBITDA metrics, right? Like relative to revenue here, like we're seeing, top line revenue keeps growing here, but they lost the same amount in 2020 that they did in 2017. Like, okay, we're not seeing that negative operating leverage, I suppose. But it's not, I'm just not really all that enthused when I see a company like this still losing money. Of course, that I'm a sucker for the cash flow statement. That does seem to be improving a bit, from 29 million to 15. So that is looking a little bit better. Lots of money being sunk into investing purposes. We can get into that later. And then here's a nice little breakdown here. I love, from a financial analysis standpoint, I love it when companies actually break down their segment and revenue for us. It gives us a real chance to understand the business, how they make money, where they make money, and where they're vulnerable. And the company did that here, and I think that's pretty valuable. So it looks like the vast majority of the revenue here was coming from the consumer segment revenue. It still is 192 million. So I assume that is people like young Justin who are like, yeah, I want to learn how to build a kite. Maybe I'll take a course on kites.
Yeah, I think that's probably what it means, right? I don't think it's I think it's
and you pay like $10 to take a course. Okay, so that's what I assume that means. Enterprise segment revenue, that's dealing with companies providing online learning for them, and then degrees is dealing with, I believe, universities, which is where ultimately I think that if they're able to make this business work, that's where it's going to have to work, because when you're handing out a certificate of some sort, you're really handing out a brand, and when you have brands, that's ultimately where you're able to generate margin and significant revenue from. So we can kind of see here, you can see like the degree segment gross profit. For some reason, it's actually attributable 100% to gross profit. So that seems to be the area where you'd probably want them to grow if you're looking at this from a financial analysis standpoint. 192 to 106 gross profit from consumers. Okay, so let's keep going through this. Any other numbers that we won't really want to take a look at? Maybe we can pull up the balance sheet. At the end of the day here, though, they are about to, if they successfully do raise $600 million, they will be well capitalized enough to take on the world. At the end of the day, I think that online learning, obviously it's here to stay. Obviously it's here a part of the future. I don't know how big of a business it is. When it's not really defendable. There's always other companies that can come along. Most of the institutions that you're competing against, they have access to platforms where they can just go and sign up in an LMS, be it Moodle, Desire to Learn, what is it, Blackboard. What do you guys use at your university for your online platform?
It's called Slate. I don't really know like what the program, the developers of the program are, or like anything like that. I just know that we log into Slate every day.
That could be an interesting go public name right there, Slate, if it isn't already. So anyways, long story short, I don't love the online learning business. I used to run an online school. I built up accredited or approved by the Ministry of Education of Ontario to dole out credits. And the thing I didn't love about the business was just the fact that there's a ton of competition, right? Like even if you want to do a kite course, you're up against YouTube, which is free. So how much are you really going to be able to charge for these courses? Lynda.com, by the way, have you ever been to lynda.com?
I haven't. I actually think that you sent me something from that website a long time ago. But I have never.
I love if you're looking to learn about anything, whether it's how to use Microsoft Access, how to use do your own video editing, something like HTML from beginner to advanced, whether you want to just learn marketing, it's like a $20 a month package, maybe $30 a month. A lot of in Toronto, if you live in Toronto, you actually get free access to lynda.com with your library membership, which is free if you have a Toronto address. And you literally use your library card to check into lynda.com. Lynda.com got taken out for, it was either LinkedIn or Microsoft for like $1 billion. I like that business model because it was sort of a monthly, like pay $20 and go nuts. And all the courses, they had the same sort of style to them, the same sort of branding to them. Big fan of that platform. But ultimately, I don't know how much it's going to be worth. When you're already valuing these things in the billions of dollars, how much bigger can you expect them to realistically grow to?
Yeah, it's hard, especially because they're probably like top ticking the online learning model. I think as we get more vaccines, we'll be heading back to school, right? We've been told that September we might be going physically back to school, or as soon as September. And then you won't have all these like grad students who are the high paying, high margin students on this website. So you might see a downtick in revenue when.
Mm-hmm. Okay, so let's pull up the next one here, Mr. Justin. Ascend Wellness, they filed their IPO. What do you know about Ascend? I don't know a whole lot about Ascend.
I don't know too much either, actually. I know that it's like regarded as one of the maybe like top 3 private names that's left. I know that there's the chatter about 6 months ago, 4 months ago, that Truly was going to buy Ascend Wellness out. I believe that they have they have a few. They're in a few different states. I don't know how deep their penetration is or how many stores they have. But from what I've heard is that they're pretty like large private operator, one of the largest private operators still in the space.
Okay, so I didn't like that headline I had up. That should have said they filed their S1, not their IPO. Yeah. Let's pull this up here. Ascend Wellness. I don't know a whole lot about them. I've heard a lot about them over the years. There is a look at one of their pretty little cannabis stores, bettering your life with cannabis.
Yeah,
okay.
they have a few good slides here. I think the most notable thing is that they've applied to list on the CSE and the OTC, which is where they'll list. Obviously, like it, they can't list in the US right now.
Yeah, I got to say, $144 million in 2020 revenue, from what I was hearing, is not quite as large as what I feel like I was hearing. It's still quite sizable.
Yeah, it's good. So I mean,
21% adjusted EBITDA margin. Okay,
yeah,
that's
but
not bad. So they're big in Illinois. Obviously, that's a sexy state. I mean, they probably have had numerous offers to be taken out. Oh, they got a New York license.
Yeah.
New York. This is, what's kind of nice about this is they're largely Northeast based. New Jersey, New York, Ohio, Illinois, Massachusetts. It's not really Frankenstein.
No, I think the New York licenses come from them loaning MedMen some money. I think that's how
they walked away with them.
Yeah, maybe I don't know, because I know I was reading this right before the show started, and the use of proceeds, they said that they lent MedMen some money. So I assume it was that transaction that happened 2 months ago.
Here's a question for you. You follow the MSOs pretty closely. Do you think that today's and we got word from my man Betting Bruiser says the New York license came from MedMen. Do you think that anybody cares about canopy growth? Not the actual company, but cultivation. Do you think that that's exciting any of the cannabis investors out there at this stage?
I think it's something to keep track of. I think especially in like very limited like licensed states or like supply constraint states, so like Illinois, Massachusetts, that canopy will probably see 100% follow through. So like whatever they cultivate, they'll sell as long as like they can sell it, right? And I think having depth in a market is probably better than having like the flag planting strategy. So I do think canopy is pretty important to look at. Maybe it's probably just company specific and state specific.
I gotta say, I get so excited when I look at these MSO, like when they talk about average sales per square foot, and like this is like the Canadian cannabis bubble was pretty dumb. Like it was like I seriously didn't know what anybody was talking. And like that's like I got bummed out when Curaleaf announced that European acquisition.
Yeah,
it felt to me like that was and they even they filed it. They said it right in the news release that it was insider self-dealing.
Yeah, but and they filed it.
They didn't use those words, but But then I go on Twitter and I see all these like people that are celebrating. It's like, Curaleaf, they're going into Europe. It's like, fucking why? I see. Because Boris's company owns a bunch of this company that they're taking out for $300 million. Are we going to see a business acquisition report that tells us what we won't, because it's not big enough. So no one's going to find out anything about this asset that they bought. But when I look at these U.S. operators, I get excited because there's real metrics to look at, right? And where like in Canada, it's like Europe became such an annoying footnote, because what Europe was they all built too much square footage, and then they needed a place to tell analysts that they were going to sell it to in order for those spreadsheets to work. These are real metrics.
This slide that they own is slightly confusing. because they're using what it seems like a single store stats, and they're not using the like the average or the group of all their stores that they own. Because I was really confused at the $11,000 average daily sales per square foot number. That seems
Why did you find that confusing?
it just seems kind of like high. It doesn't seem right to me. But like then it's the headline above it is select Collinsville store stats. So I guess they just pulled the either the best stores or maybe like a subset of stores in a certain area.
That that does seem high. So like let's say that you got a 1,000 square foot dispensary, which would probably be a pretty large dispensary, but they I don't know. That sounds about right. Would mean that you're doing about $10 million at that store.
Yeah,
Right?
which I mean, because these are Illinois stores, I don't think that's high. Like I think Air Wellness and TerraSend have both said that they believe that their stores will do I think 40 million a year in uh uh in Illinois, and I assume that's probably true. I mean, Illinois is one of the most supply constrained states, so you'll obviously see a lot of all your money or all your flour fly off the shelves, right? Hmm.
This is a solid company, though. This is not.
Yeah. I don't think it's
I don't know that I'm going to like the valuation, but I like the company for like high level from looking at what I'm seeing here. This doesn't look like it's just a product of financial engineering like we've seen in the past. Um, I'll let you guys look at my face while I scroll through this. I want to see. Let's try to pull up
yeah.
the cash flow
I see
statement.
like
Where is
they
this?
lost, they lost 25 million or 13 cents a share. They have 430 million in assets, 143 million in top line revenue. You could probably see this, IPO at a pretty hefty valuation. I don't think it's 1 billion. It could be, it could be
Oh,
500.
I'd imagine this is. You think this will only get
I
500?
don't know. I mean,
I'll
we'll see. The one thing that I would kind of be interested.
I'll bet this gets a bill. I'll bet this gets a
Yeah.
bill.
The
Yeah. Let's. It will trade on average over $1 billion first week of trading.
Whenever it files, right? Like whenever it goes public.
What do you drink, Justin? What kind of booze would you like
Uh,
if I'm
Apple
wrong?
whiskey. I'll get.
Apple
Yes.
whiskey. That sounds like a fruity kind of drink there.
No. It's whiskey. Come on.
Because remember, so I will order you a fine
Okay.
bottle of Apple
Yes.
whiskey. If I am
if this trades a billion over $1 billion,
$1 billion in its first
week.
It's first week.
Right.
If the volume average weighted price takes us to a market capitalization over $1 billion, I'm talking like the actual pro forma share count.
Yeah.
So like not some like like multi-voting kind of. I haven't even looked at the share structure yet. But I'm very comfortable that it'll trade.
All right, that sounds like a reasonable offer. Or reasonable. I'll buy you. Yeah. What do you like to drink, Steve? Boxed wine.
Lucky for you, I do like box wine. I actually got a vape pen last week, and I didn't know what I was doing last night, and I took too much of it, and I walked down to my basement and I just like put on the TV and I just like passed out. I fell asleep at like 8 p.m. last night. So maybe you can give me a vape pen.
Okay, I mean that's fine.
This one might be done by then.
So I was gonna say the one thing that I'd be kind of interested to hearing either theories or someone actually in the know will tell me is why they're going public like via like they're IPOing. Then all the SPACs that are out there. There's quite a few cannabis SPACs that are out there that'll probably be able to provide them with a decent amount of cash.
Well, that's That's going to get really interesting. Is some of these SPACs are going to get pretty desperate and they're going to start throwing around stupid money. So that certainly could be the case. So we'll see. This could be a fun little bet. Volume average weighted price first week, market capitalization over $1 billion.
Hey.
Now the other thing is we don't know when this is going public, but they'll probably be running around the street saying that they're on like a $250 million revenue run rate or something like that. By the time they go public, and then like I'm just betting that they're going to be able to get 4 times sales, which I'm confident that they will.
Yeah. I mean, I think it's pretty reasonable to do 4 times sales or do 10 times sales, even. But I wonder how much like volume there will be. Especially we have Gauge IPOing, I think in April, so in a few weeks.
We should do a thing on that. We should put together round up the team and do a nice little video on Gauge. We got Bruce Litton coming on the show on Thursday, by the way.
I haven't seen I haven't seen like them file an S1 like other than their Reg A when they filed it a few months ago, and I haven't seen an updated deck from COUR or anyone else.
Okay,
but
well, look, Justin, I'm excited about our bet.
Yes.
I'm confident that I'm going to win. I was going to ask you for something far more embarrassing, but let's make our first bet just a nice little drink, and we'll see. Is there any word on when this might go public?
Probably not. Like I haven't heard anything. I literally I just got wind of this or got this file sent to me 10 minutes before we came on air. But I would assume it's probably this year. It might be like second half of 2021. Probably when I suggest it goes public.
Well, that's yeah. I'm sticking with my bet. I feel like I've picked too easy of a bet that this is you don't have a shot.
Nah, I mean, maybe I'm just an idiot, which is quite possible. And I think I mean, if they go around saying or guiding for
$250 million revenue,
but see, they cannot actually do any. They cannot give guidance because they're doing a traditional IPO. If they were going through a SPAC, they could have came out and said, "Hey, we're going to be doing $300 million in 2021," and pump this to high heavens if they wanted to.
Okay, well, Justin, we've reached that point of the show where it's time to wrap it up. You got any parting shots for the audience?
Not really, actually. Just help me win this bet and don't buy this IPO, I think.
And to our audience, look, we've had some technical difficulties today. Jay is welcoming a new member of his family. Hopefully he'll get into that news tomorrow and give the audience a bit of an update. We got big guests lined up the rest of the week, from Will Ryan to Tim Seymour to Bruce Litton to Daniela Cambone, who's a star on Kitco. I've never seen anybody interview her before. I've seen her do all the interviewing, so that's gonna be fun. We'll see if she does that thing where she starts accidentally asking questions because she's not used to being on the other side. But look, nothing we talk about here is a buy or sell recommendation. I want to make that clear. It is for informational, entertainment purposes only. If you're looking for that sort of thing, go find somebody who's licensed. I'm not licensed, and you can tell from the age of Justin that I don't even know if he's old enough to have his driver's license. Definitely not old enough to be drinking, so I might get in trouble for that. Just kidding, Justin. Look, you could have spent your last hour staring at any screen, any place in the world, but you chose to spend it with us. I sincerely appreciate that. And join us tomorrow. We'll have Will Rind.
Get up at the top, it's a better view in it. I'm not surprised at all.